Tuesday, 6 to 8 p.m. and Friday, 6 to 7 p.m.
All right, 12 minutes now to go till 7 o'clock here in Power Business on our Wednesday edition of the show. And of course, we continue to unpack this postponement and the implications thereof of the budget speech that was set to be tabled today by the Finance Minister, Enoch Godongwana. And of course, I'm joined by my guests this evening, Kabelo Moutloatse, Senior Tax Debt and Accounting Specialist at Latita Africa. Also joining us, Frank Blackmore, Economist at KPMG. I guess, Kabelo, I'm going to turn now to you because it was expected that Godongwana would announce a tax bracket creep where tax brackets are not adjusted for inflation. I guess with 1.6 million taxpayers carrying more than 76% then of the income tax burden, how sustainable is the current tax structure?
Basically, it would be from a collections perspective. Again, it would be a sustainable view to actually not increase because of, as we have seen over the past years, that many companies, as we have alluded, that from the COVID, they have been struggling to actually give the employees a necessary pay rise, or even some other companies not even giving any at all. So it would be hurting for him not to actually, in fact, for him to propose increases for personal income taxes. But when you look at the revenue collection side, I think we are stagnant in that effect that SARS has actually broadened its scope with regards to individual taxpayers coming forward and declaring their income.
Now, Kabelo, it was also been suggested by some analysts that instead of finding new ways then to tax South Africans more heavily, there should be a tax relief to stimulate economic growth. And as we also discussed on this conversation this evening, but talk to me about, what's your take on this?
At the current moment, in my personal view, I feel that some tax reliefs, they would be welcome, but at the current rate that we are facing a deficit, it's either we're going to be putting a government in a position where they need to actually go back and borrow more debt, and more debt would mean more interest payable, and effectively we're going to be stuck in the same cycle of actually going back to debt, or either coming again to proposed increases on the VAT side, or also introducing some other aggressive measures to those who are well off, like a wealth tax that would tax the higher income earners of the country, and that would actually see most of our South African high elite actually moving their assets abroad so that they can actually not be caught up in the net of actually paying higher taxes, just so that they can actually cover off for the tax shortfalls that there should be.
Mm-hmm. All right. Now, Frank, turning to you now, I guess, this is the first budget under a non-majority government, as we've been pointing out throughout the show. But what does the deadlock then reveal about the challenges of fiscal policy making in a coalition government?
Well, besides the first part of your question, I think all it tells you is that there are challenges in a coalition government. And when this government was put together, I think a lot of the questions, perhaps even on your show, if I can remember correctly, were, is this going to mean policies are not going to be enacted? We're not going to move forward as quickly as we could because there are going to be certain parties that stop other parties, etc., etc. But I think this is a progression of the democratic process in South Africa. It means all parties need to sit down and agree on a budget that represents all those diverse views of the different parties in the rooms, and that needs to be presented then to the public once done. This has obviously not been how things have gone. We have seen foreign policy come out that hasn't been sort of agreed upon with all other parties. We've had various pronouncements, but in the budget, it's forcing them to work together. And so I think that even though it's a stumbling block currently, I think it will be good for long-term cooperation between the parties, assuming that the parties actually want to cooperate.
And I guess, Frank, just looking then globally at coalition governments, We've seen that budget rows have sort of brought down coalition governments globally. A recent example being Germany last year, where wrangling over the budget saw the finance minister axed and the ruling coalition ultimately collapsed. I guess, could it be said then that Finance Minister Enoch Godongwana must be sort of feeling the heat right now?
I can't really say because remember, the finance minister is a representative of a large party. I don't think he would make decisions by himself unilaterally and whatever. So I think although he's the face of the budget, the next budget, I'm sure, in March will be a representative budget, and we'll see a lot more smiling happening at the event.
Mm-hmm. Now, Kabelo, I want to know, how then does South Africa's VAT rate compare to those of similar economies, and does increasing it, I guess, make sense in the current global economic climate?
Well, as I said again, I think we should take conscious of who gets affected mostly by this VAT increase. Yes, when you compare it to other developing and developed economies, the VAT rate ranges from 15 to 27%, and one would say that we still have some more room to actually maneuver to increase the VAT so that we increase on our revenue line. But the truth of the matter, in the current economy that South Africa finds itself in, we are not in a state where we could be hurting the poor, because of eventually it's the poor that we are trying to protect. And as a trade-off that the system would actually give is introducing more food items under the zero-rated banner, but that would be just I'd say a tear in the ocean, where we're looking at more majority of households living below the poverty line. So for me, I think it needs to be more broader fetched, where we try to find other avenues, as I said, for SARS to tighten up on their collections as well. But the increase for now, I think it's something which is not actually called for, to increase the VAT, because it's going to hurt the end consumer at the end.
And I guess then, as we wrap up our conversation, looking ahead then, Kabelo, do you expect this budget standoff then to be resolved quickly, or is South Africa likely, to face some prolonged fiscal uncertainty, something I guess we'll want to avoid?
We are hoping. We are hoping that by the 12th of March, when the budget speech is actually presented, we would get some finality. My guess would be that they would, instead of the 2%, they would rather move it to a 1%. But also, we need to be conscious of who are we hurting in the process, and how are we also just benefiting them, because of, as we had mentioned earlier on, it's quite something else to say we are increasing the revenue line, but we are not taking necessary track of how that revenue gets spent.
And Frank, I guess you weighing in as well then, as we look ahead then, do you expect this budget standoff then to be resolved quickly, hopefully?
Perhaps not quickly. They have given themselves quite a bit of time, but I think the consultation process in order to get to the final product will be beneficial to the country, because what will happen is, obviously, when you come together tomorrow, the finance minister will say, right, you didn't want this, what are the proposals? This is the circumstances we're in. And I think that process will reveal a lot of aspects of the budget, not only this VAT issue, but I think people will pull a blank sheet of paper into the room and start from scratch. What are we aiming to achieve? What are the expenditure items that we want to cover? Are they all necessary? And therefore, I think you'll get a lot more of a joint budget coming through when we sit in March for the budget. And I think that'll be to the benefit of all South Africans.
Yeah, definitely. That was going to be my next sort of question is, weighing up the positives and I guess the negatives of this delayed budget. What would be sort of the take there?
Definitely. I mean, it was. I think it is an embarrassment in a way. The budget event has always been quite a prestigious day. We've come through from little cactuses being brought, or aloe plants under the days of under previous finance ministers. There's always quite a good atmosphere. There's a lot of anecdotes that come through from the public to the finance minister. And we unfortunately had none of that today. We had a bit of uncertainty as to what actually is going on. But at the end of the day, as I mentioned before, I think when we see the budget coming in March, that has been approved by all parties, and as a result of the collaboration of all parties, I think we'll be better off for it.
All right, and I guess that's where we're going to wrap up our conversation this evening. Thank you so much, Frank and Kabelo.
You're welcome.
Thank you.
All right, that was wrapping up our conversation there with Kabelo as well as Frank there in terms of the budget speech postponement, the tax issues there, unpacking the implications of what a VAT increase from 15 to 17%, what that would have meant then for South Africans, average South Africans, as well as the increase, or whether that would have garnered enough the revenue that it was sort of targeting there, as we see sort of that gap between revenue and spending on the government's perspective. But of course, we'll continue to unpack the speed, or the postponement rather, the delay in the budget now to the 12th of next month. And as you heard from Frank, that remark about, the predictability of budget cycles, that's, is always counted in South Africa's favor. But of course, today, an unprecedented occasion. And of course, you can also always weigh in on your thoughts regarding today's sort of outcomes, developments. Have your say on 0861987000 or WhatsApp us on 083-303-7093. We're also on X. That's at Power FM 987. Remember to use the show hashtag Power Business. But for now, it's just gone 7 o'clock here in Power Business. It's turn our focus now to the news desk for the latest with Nhlanhla Sehume.
Connect with Nosipo on X at Nosipo_Khadebe.
All right, 26 minutes now to go till 7 o'clock here on Power Business on our Wednesday edition of the show, as we continue to digest now the delay in the tabling of the national budget. And of course, we continue the conversation there. And we look here now at National Treasury's proposed VAT increase from 15 to 17% has sparked a political deadlock, leading to the delay of the 2025 budget speech, as I mentioned, an unprecedented move in democratic South Africa. With a shrinking tax base and growing fiscal challenges, the government is grappling with how best to raise revenue while balancing economic growth. And to help unpack the implications of this delay, the proposed VAT hike, and the broader tax policy debate, we're joined now on the line by Frank Blackmore, economist at KPMG. And of course, we are also joined by Kabelo Moutloatse, senior tax, debt and accounting specialist at Latita Africa. Of course, Frank, I'll start with you. Very good evening. And of course, welcome to the program.
Good evening, Nosipo.
So, Frank, we now know that there was a disagreement, or it's been reported that disagreement within the GNU over the proposed VAT increase from 15 to 17%. That's caused a political deadlock. But from a tax policy perspective, was this the best option to raise revenue?
That's a tricky question you ask. So I think not in the circumstances that we're currently going through. Not that we need to raise revenue. If we look at our revenue raising side of the budget, if given that the other side is the expenditure, what happens to that revenue? The problem is not with how we raise taxes. We raise taxes in line with countries like more than the US, like Switzerland, like Australia, these sort of countries where everybody has a job and everyone's contributing to the fiscus. So it's not the collection side of taxes that we have a problem with. What we have a problem with is sometimes the expenditure side of the economy, because the budgets are not getting to where they should be getting, and they're not working for the people of South Africa in terms of either building the economy, increasing our livelihoods or quality of life. Public services should be, we should be flying at this point, given the revenues we have, but we're not. So this debate always to where are we going to find the money to pay for the expenditure, I think has to be kind of reworked to say, do we need all this expenditure? Is it being spent efficiently? Is it going to the right places? Do we need a smaller government? Do we need, more oversight, whatever it may mean? And I think that's where a lot of the debate should be happening, not at where can we go and find more revenue from the average South African citizen or business.
And I guess, Kabelo, I want to bring you into the conversation now, Kabelo, but first off, if you could please help me with your surname. But, Finance Minister Enoch Godongwana addressing the media today alongside Treasury, noting that he called up SARS Commissioner Edward Kieswetter upon reading the Commissioner's view that further tax increases would have minimal impacts on revenue lines. What's your take?
Thank you. My surname, how to pronounce it, is Moutloatse. So basically, when we look at the proposed VAT increase, I think we should also take conscious of who this VAT actually, the increase is going to hurt the most. And when you look at our South African spectrum, the poorest of the poorest are the ones that are actually carrying the VAT burden as opposed to any other taxes. For instance, if there was an increase in the CIT or any other taxes, this would be, for the CIT predominantly, we'd be looking at investor confidence being lost and also more job cuts on the horizon, because of when you look at the landscape of South Africa, we come from the effects of COVID-19, where most of the companies are still reeling or are still recovering from that. And so the impact of using the VAT other than other taxes would actually hurt the poorest of the poorest, and actually targeting for the CIT will also affect the investor confidence and also maybe affect the job cuts that could actually arise due to most of these employers cutting down on their employees just to be able to fund for the additional taxes.
Yeah, certainly, Kabelo. And I guess a follow-up then, what alternative measures then, besides VAT increases, could have been considered then to address revenue shortfalls?
Basically, we are looking at a spectrum where I think SARS needs to up its game also on the collection side of things, where there are so many loopholes in the tax system where collections on illicit products and any various other things within the economy are not followed up. So it's merely a call up to SARS to actually step up their collection game as well. And also, I think, as the economist has said as well, it's also important that we not only look at the revenue side, but also how is the government actually spending these revenues so that they are actually getting the value for money that they're actually spending it on.
Frank, the cost of living crisis, that's still quite high, the cost of living in South Africa. And we talk about it quite often on this show about how households continue to struggle despite some reprieve with interest rates and falling inflation. But how do you see a 2% VAT increase affecting middle and lower income households, especially given then the rising cost of living?
Sure. And just for perspective, I think, on what Kabelo said there, the bottom end of society, the poorest end of society that still works for a living, spend perhaps 70% on a combination of food and transport. That means it only leaves them 30% for things like clothing and any other expenditure they want to undertake. Now, if you come and you put this 2 percentage point increase onto the VAT rate, it will be highly inflationary for people who do consume so much of their income on these goods and services that would be impacted by the inflation, right? So besides being inflationary, so we would see, at least, because what is this actually doing? It's like putting a 2% tax or increasing costs by 2% for everybody out there. Secondly, it would reduce your disposable income because now the portion going towards food and transport grows because the costs of those goods are more expensive. leaving less money over for use. And I suppose and therefore, as Kabelo mentioned, it would be highly regressive in that the same if I bought a loaf of bread and someone else bought a loaf of bread, the amount of tax we pay is the same, irrespective of what our incomes are. One of the things that they have come up with then to try and counter this is this zero rating on certain goods. But the whole aim of taxing at the VAT level is that because it's a base tax with a very broad base, so everybody contributes. If we start now adding to these zero-rated goods, we start to actually move from a VAT system to like a local excise duty where certain products are taxed but other products are not taxed. Plus the fact is, if you give more zero-rated goods, what happens to your collections of your VAT? Those will go down, right? So I'm not sure this thing has been well thought out from an economics perspective. The other situation is, of course, we would get later down to the speech into what we're going to use it for, and we would hear, that social grants would perhaps increase marginally. So on the one hand, you're taxing these people more, and on the other hand, you're giving them slight increases in social grants. Well, again, that doesn't seem to be a consistent policy if you want to grow the economy and improve people's lives.
Certainly, Frank. And I guess, South Africa already facing a tough fiscal position with high debt levels and slow economic growth. I guess how then does the uncertainty surrounding the budget affect then the country's broader economic trajectory?
So I think on that perspective, the markets obviously reacted quickly. We saw depreciation in the rand. We saw sell-offs of equities, etc. So we saw some negative impacts in the market, but those will be short-lived. What's more important is to get the budget right. The Government of National Unity has come out on their formation last year and said they have, I think it was 3 objectives. One was to get growth back into the economy. We can't grow at this slow level now because it doesn't allow more business to take place. It doesn't pull unemployed people into the economy, and it doesn't create that economic inclusion we're looking for. So growth was one. Secondly, we want to look after the people who are not part of the economy, so the social wage is one. And then I can't remember the rest, but if those are your targets, your budget should surely follow your strategy in that respect. And in this case, I don't think that was the case. And what tells us that? Because there's still disagreement between different parties on certain proposals in the budget, and at the end of the day, sort of this last-minute desperation makes for poor policy on behalf of government. But that's why I think, even though it has been delayed until next month, it's better for us to get it right than rather to have pushed this through and have the negative consequences that we would have got from perhaps this increase in VAT and the other proposals that they would have made.
Yeah, certainly, I guess, measure twice, cut once there. But we're going to have to take a break, Frank and Kabelo. So please, if you could just stay on the line. We need to take a break now with 15 minutes to go till 7 o'clock. Take a break for traffic, as many of our listeners will be trying to navigate the roads this evening. As I mentioned, with the wet weather conditions across parts of the province. Also, those traffic lights that may be out of order as a result of any other issue. But of course, Refilwe is on standby to give you the latest on the traffic conditions on the roads this evening, as many of you navigate your way home or wherever